Hey traders, hey everybody, happy Monday. It's the 31st. We're wrapping up the month of July, but we're kicking off a brand new trading week. We have a big earnings week this week with over 1,000 companies reporting earnings, anywhere from before market to after market. So we'll take a look at that. I posted that in my Discord channel. Let's jump into the risk disclaimer. We know there's risk in trading. Please don't always use trade capital only. You know the deal there. If you're following me on social media, best place to find me is YouTube and Twitter, youtube.com/Chris Pulver. And then verified Twitter handle at Real Chris Pulver. Also, in my YouTube sessions, you can go back and watch some of the latest live sessions. I post my Discord thread. I can share that as well for this video. I'll be posting this on the YouTube channel and posting this elsewhere on social media. So let's get into the charts and have a look at everything this week. I was just looking at the bigger time frames, trying to clean up my charts on the SPY. We're trading at 457. The 460 level, since we had kind of an interesting week last week, it was very quiet. Monday, Tuesday, even Wednesday's FOMC during the active trading day, pretty noisy. And then Thursday was this big blowout level where we tested the highs around 460. It was just shy of that. Let me zoom in. Let's go to the 1 hour time frame. So Wednesday's close was pretty much at lows right here. So we closed around 453. We had a big gap to the upside around this 459 handle. Let me see this exact high. It was 459 and change. The high is 459.44. So didn't quite tap 460. That was a big open interest level for the week. And 451 was another big open interest level for the week. So it's really not surprising that the market found a way to get within about 50 to 55 cents of that 460 level and within about 50 cents of that 451. Overall, we had a good week last week in trading, some good earnings. On some short-term options trades. We had some good forex profits rolling in with some auto trading. In fact, one of my system highlights was Equalizer. It did great last week. The sell side, I think, ended up walking away with 3,200 pips for the week. So net between my Pockets Pattern Pro, some Perfect Storm, some Equalizer, some Flex Trading Room, and some stocks and options, we did pretty well. So, but that week's done. Doesn't matter. Let's go to this week. So we're trading around 457. We still have a gap here in the near term. I could see some indecision happening on the technical side if I go back into my SPY right here. I have a lot of indicators. So I've got supply and demand on this chart. I also noticed some, highlighted pockets. We have some overbought conditions with divergence. So technically, I am looking for price to possibly use this FOMC high as our intermediate top. So I could see price coming back to test it a little bit and then failing. Maybe we have a range here from 460 to 451, maybe this 460 to 450 range. I'm curious, of course. I mean, as we head into end of the month and into a new month of August, we have a pretty busy week to kick things off. So let me show that right here. This week we have Monday, pretty low and medium impact for the day. Tuesday, Aussie cash rate decision. The RBA expecting to raise rates another 25 basis points. So we still see central banks on the rate hike cycle. The ISM PMI numbers for the U.S. at 10 a.m. on Tuesday. We have employment numbers out of New Zealand on Tuesday. That's actually Wednesday's trading day for Forex. Wednesday, we have ADP, which is the precursor to non-farm on Friday. Thursday, CPI data coming out of Switzerland. We'll see if that comes in better than expected. This is also a kind of a preview to what possibly happens with the Swiss National Bank in September. Their inflation thus far has been under 2%, one of the few countries out there that's reporting a year-over-year under 2%. And if that stays the case, they might just hold rates, which they currently are sitting at 1.75. If that's the case, I'm looking technically for some big moves in the Swiss franc. I've been positioning for those for probably the last 6 to 12 months and looking to add to positions on some confirmations. So traders on my flex room know that Swiss is hopefully going to pay us very, very well over the next, let's say 6 to 12 months. Let's go to Bank of England. We have a rate decision expected on Thursday, so another central bank. We have Aussie this week. We have Pound this week, expected to raise rates another 25 basis points. We'll see if the Monetary Policy Committee change votes or it remains as expected 7-2. Also on the same day, so that's 7 a.m. Eastern Time, 7:30 will be Governor Bailey from the Bank of England. We have unemployment claims for the U.S. at 8:30, and we have ISM PMI on Thursday at 10 a.m. for the U.S. And then Friday, we have a double whammy with employment. We have CAD employment and U.S. employment. It's going to be important to watch. We're expecting to see over 200,000 jobs. We'll see if the U.S. beats it. And then the argument is it still this tight labor market? What are average hourly earnings? Are wages staying above inflation for the first time in who knows how long? All right. Unemployment rate, we'll see. That's 3.6. I think we were ticked up from 3.4 was our lowest in I don't know how many years. We've ticked up just a little bit higher. But we'll see. So unemployment claims on Thursday plus non-farm on Friday. I don't really pay a lot of attention to ADP. Usually ADP numbers on Wednesdays are way off. It's a precursor, but usually it's non-farm that I pay the most attention to on Friday. So we'll see. But like I said, a lot of companies reporting earnings this week. I shared that in Discord right here. So I'll click on the image here. So let's see if I can zoom in. So 1,157 companies reporting earnings this week. Some of the notables: Apple, Amazon, SoFi, Advanced Micro Devices, Robinhood, DraftKings. I know Coinbase is on there as well. Zillow is on there. We have Starbucks. We have Cisco for food. Kraft Heinz is on there. So some of those consumer defensives that we're in had some chart alarms going off this morning. Rocket and SoFi, which we have some ownership of, doing pretty well. Airbnb's on there this week. So it's just a big earnings week. Looking forward to it actually. And we'll see if that's enough to kind of be the catalyst this week. Last week was FOMC, and there was a lot of anticipation Monday and Tuesday. So Wednesday kind of opened the market up. Thursday, Friday, we had a lot of volatility. Even though price didn't really go anywhere, right? We had a lot of volatility within those couple of trading days. So if I go back to the shorter time frames, here's the 5-minute chart. So this little move on Wednesday, I was able to grab some nice short-term profits. This little move, actually, that was a huge move on Thursday. Lots of profits right here as well. I grabbed some profit on the opening bell because I was already in a long straddle. So I had a long call here that I got paid on. I lost on the put side, but I ended up taking profit almost 2.5x on the upside on the SPY, and then getting short on Thursday, and then getting short on Friday. So overall, pretty good. We're still seeing a lot of chop right now in intraday price. I haven't placed any trades this morning. I will look to see what happens. I think that everything's pretty tight right now. Watching this level, this takes into account Thursday's high. This takes into account Wednesday's retest of the gap low. So I think if the bears gain traction this week, the bears will be taking out, this intraday low from last week around 456 and maybe coming in to fill this gap around 452. I took a look at open interest levels this week. I don't see a ton. So if we go out to the 4th, which is Friday, and we put on the open interest, what are the big notables? So 460 and 458. Those are pretty quiet because honestly, you're seeing equal levels of open interest and open interest changing going on day to day. So open interest, for today's expiration is the end of the month. 460 and 459, bigger levels. 458, pretty big levels. 457, 461. So we're definitely favoring the high side as far as today's levels are concerned. If I go out to Friday again, and I'll switch back and forth between the SPY and the Qs, big open interest here, 460 and 458, both favoring the upside. I don't see a lot of 450s or 451s this week. Okay, let's go to the Qs really quickly. Then we'll get into some currency trading. Expiration for this Friday. Let's take a look at today since it's the end of the month. Anything that really stands out? 388 on the upside. So we're trading right now 383 and change. So we'd have to see another run to the upside. I have some higher covered calls that I don't intend to get called away. I've got them way up there. 393 on the Qs that expires on Friday. 463 on the SPY. So I don't think those levels are going to get tapped this week. If they do, I'll roll them. But I'm just looking to generate some income on the shares that I own this week. But 388 way up here, 387. So looking to see if the market can jump up a little bit for today's trading, perhaps. I see 392, 391 standing out a little bit, but that's again for today's expiration. We go to Friday. Let's see what we have for Friday. Open interest, again, big levels. Again, not a lot. I don't see a huge change here. 383 is the biggest jump in open interest change. The highest level I have is 380 and 382, which is right around just the recent lows. So let me go back to the Qs. Again, you can see the indecision. So we have this recent level, this recent level. If the bears are going to be in control, I think the bears can take down this area, break these intraday lows from last week, and then we have a gap to fill around 377. So we might see a move, topping out right around this 385 handle, possibly coming back down into some intermediate lows around 376 and 377. So I'll be watching those levels, just not looking to force any trades in case it's really choppy. This is all I get from price today, 382 to 384. It'd be this $2 range. That's a tough one to trade. It's nicer when the Qs are moving, $4 to $5 a day. It's certainly nicer when the SPYs are moving $3 to $4 a day. We had a little bit of an uptick in those daily trading ranges. So this is my 20-day at $5.43. We still have the Qs averaging about 0.9% on the day. My SPYs are on 402, so that's up around 25 to 30 cents over the last couple of weeks. I've seen this increase. So now the average is 402, but I'm still looking to plot my levels around, like 0.6%, 0.65% on the day. So that's what I start with. Anytime the market's able to surpass that, it just makes the trading easier if I'm doing short-term options. Okay, so like I said, some notables this week as far as earnings. 1,157 companies. Took a look at a run on SoFi. Last week I had a covered call at 1050, and I'm glad it was last week's expiration because now we're up and through that. So I'm going to look at adding another covered call. I'll probably do I might look in 11 or 12. I mean, again, I don't want to lose the stock, though. I should be careful about covering this. Maybe I go out a little bit further. Positive earnings this week might continue to get SoFi to react and go to the upside, but this is a pretty solid break. This initial level where we introduced SoFi to the markets back in 2021, that was around $10. So holding $10, it opens up a room, opens up a run to 13 and change. Opens up. I mean, realistically, for me, owning SoFi, in the single digits, I'd love to own this thing towards $20+ and see if I can get 300 to 400% on that position. So SoFi is looking pretty good. Rocket's also back from the dead a little bit, coming back up. Chart alarm at $11 and change this morning. And where could I see Rocket? I could see Rocket back up to 1750. I'd like to say I could hold this for the next 6, 12, 24 months and see this thing back up towards these equal highs around $30+. I own Rocket in single digits. So a couple of stocks that might be coming back from the dead, getting some gains. It's not done yet. I mean, Rocket still has its work cut out for it. But if this is a Head and Shoulders, for example, this could be a nice neckline break right here. So this is a deep left shoulder, head to neckline. If this is the right shoulder that's finally starting to break, I measure this move out here in yellow. That gets Rocket just up around $16 and change. We have our opening levels around 17 and change. So let it run. I'm not trying to cover this right away and get in the way. I think Rocket. I'm not sure if they have weekly options. Let me see if Rocket has weekly options. Maybe it's monthly now. We'll find out. So if I did a covered call on the shares I own, I could go out weekly. Okay, so I could do weeklies, but I don't want to get it in the way. So if I did this week, $12. I mean, I'm not getting a lot of premium for it. I probably won't cover it. $11.50. That's not bad. But if we push any higher from positive earnings this week and lift the broad market, again, this probably gives me less maneuverability and certainly way less credit and premium to collect if I'm trying to roll covered calls on Rocket. So this one might be better off just setting a, take profit on the actual shares around 29 to $30 and just let it sit there, let it take profit. And then if I'm up here and I'm looking to take profit, start covering this thing when I'm happy to let it go. I've also been patient enough to build a position on Rocket and SoFi that let's enjoy those profits. So let it run, in my opinion. All right, let's switch gears to currencies. Let's go to the dollar index. So dollar index is trading at 101.60. I told traders a lot last week. The DXY 100 is the big level. If we're below 100, look out below. That's also a major catalyst. I think if we break below 100 on the DXY, I think this market, the broader market rips much, much, much higher. I mean, risk appetite, I think, is going to be pretty firm and pretty strong if the dollar is really dropping in a big way. But considering the seasonality right now that we're going into the end of July, we still have August of trading. It's very common that August is a top or bottom month. So I could see this level being a bit of a fake out right here, and the dollar just stays bid over the next couple of weeks. Now, again, it's an interesting correlation because let's say we have solid job numbers on Friday. I mean, does solid job numbers mean that it's going to force the Fed to be more hawkish? Is the Fed going to have to raise rates again? We'll watch this week in the trading rooms. What are the CME watch tool numbers giving us? Last week, as of FOMC's decision to raise rates 25 basis points, it looks like we just have a pause now that's kind of indefinite through maybe Q1 of next year. So with DXY, if we stay above 100, I think the dollar stays bid. Okay, we get below 100. That's, I think, the next leg lower on the dollar, and I think there's a lot to benefit. I think energy Commodities probably will be the biggest beneficiary from a weaker dollar, but you can see that that confirmation is going to be critical. You switch over to the FXCM dollar index chart, which is US dollar. This one technically looks a little bit more obedient because we held this equal low right at 12,640. So same type of thing here. We have some resistance around 13,000. So if we stay bid on the dollar and work our way higher for this summer range, I can see the dollar index coming up here, and then possibly September, October, Q4, starting to get a weaker dollar. So if we go Q4 to Q1 on the dollar index, that could also be where we're looking at the correlation with the overall markets. So the SPY, the Qs, where's the next big move coming? Could be a big sell-off in the dollar, right? But if the dollar maintains bid and maintains some strength over this week and next week, the next couple of weeks into August, I think the stock market is going to stay pretty sideways with the SPY at 460 highs and the Qs around that 385 to 390 level. Okay, so I'll be watching that this week closely. Let's talk some currencies. Just really quickly going down through the list, I'm still long on Aussie Swiss. I'm still holding long on, Aussie CAD. I'm still holding long. We have rate decision for the Aussie this week, expected to raise rates. We have CAD employment on Friday. We'll see how that plays out with the dollar. Aussie Swiss, I'm looking to see if I can get, it's pretty simple at this point. I'm just waiting to see if we get a trend line break over here. We break this trend line, I'm going to start looking to position for some add-ons. Again, bigger bullish pattern needs to pop up. If it's a crown, if it's a head and shoulders, what better spot to do it than somewhere in here? If that's going to be a falling wedge, or this just rolls back up into this high, then it could be a very deep crown, but we could see a 5-wave move to the upside, and I'm looking to hold Aussie Swiss back up towards 65. We still have some pockets back here and pivots back around 66 and 67. So I'm not ready to add yet, but I'm looking for confirmation on Aussie Swiss. Yen crosses, so we had a yield control curve, I believe is what they called it. That's the Bank of Japan's news from last week. That was right after the Fed on Thursday and Friday. It didn't really change anything on the overall strength and weakness. I mean, last week, if I go to Friday, Japanese yen was super strong and super weak. If I could go back to Thursday, the Japanese yen was incredibly strong on Thursday. So the big sell-off we had in the stock market was a massive move on the JPY, massive move on the dollar with risk-off trading on Thursday last week. And then Friday, pretty much neutral, right? We went popped up again to have a little bit of follow-through. That was a huge fake out, and the yen ended up being the weakest of the day. You go to today's trading, Aussie and New Zealand on top for some risk appetite. CAD is getting some gains. Commodities doing pretty well today, and the yen is the weakest all over again. So I still remain firm on you have to trade the yen short term, stick with your alignments, and don't fight whatever the heck is going on here. The yen, if that yield control curve changes and we go to the Japanese yen 10-year, which is right here, okay, I mean, they're letting this break open, right? Like that was the point, is that they're willing to let this run from 0.5% possibly up to 1%, 1.5%. But how does that affect the price of the yen? I mean, this is running higher and we're seeing weakness on the yen. Last year when all this happened, when this was happening, after we had that big break from 0.25%, the Japanese yen got super strong. So, I mean, right now I'm not seeing a strong correlation of this, the Japanese 10-year yield going up equates to Japanese yen strength. It doesn't. Right now, I mean, you just have to keep following near-term alignments. So whatever the JPY is lined up on for your currency pairs, look at your 1-hour chart. Is there any direction? Look at your 15-minute chart. Is there any direction? Align those two and try to stick with it, because that is a trend line fake out. I mean, that's a perfect little morning star right off of that trend line support. And again, we might just run up to these highs. I said, for a while last year that the Aussie yen might be hitting 100 and going after parity. So if that's a large enough morning star, I could see that happening. Where there's still maybe another 400 to 500 pips to the upside. And it's just, I don't know. I mean, you can't just listen to the BOJ and say, I've got it figured out, because it is still a slippery currency pair. Aussie New Zealand, we took a short on last week. I'm looking to take this down to this pocket around 106. Aussie dollar still choppy. It's in the middle of a range and a broadening pattern. I'm going to stay out of that one. CAD Swiss, I'm long. Got in here off these equal lows around 65. I'm looking to trade this back up to this demand and pocket zone around 67 to 68. CAD yen, weakness again. This is an ugly little spot. I don't know, 109 to 110, maybe a double top. Otherwise, just stay short term and see if this thing wants to go bullish. Swiss yen, overbought conditions, overbought conditions, extensions. We came down to a large bar count on the 4-hour time frame. Tapped that last week, but look at the trend line. Support, 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 boom, right to the pip. right to the trend line, and off we go. Just completely taken back what it gave last week for JPY strength. It's given it all back and then some. So don't fight, your JPY alignments. Euro Aussie remains choppy. Stay out of that one. Euro CAD, I like CAD Swiss long, so Euro CAD going short. Same essential pair. But Euro CAD is going to be a little bit more volatile, and we've been short on this one since this turn around 48.50. Euro Swiss. Euro Swiss might be heading down to a double bottom. Since we broke out of these lows around 96, we might be heading down to this 9400 low. I'm still looking for a double bottom, which would be a great spot right in here. Double bottom here would be fantastic. We come all the way back to the center high. If we break that level, we're going towards 106. So, I'm not going to wait for a break at 1.00, 1.01. I'm going to look for, do I have confirmation to trade it here and start adding some buy stops. If I do, I'll start positioning at 97, 98, 99, take this back up to 101, and then hold on to that position for a while. That'll be my plan on Euro Swiss. Euro Pound, no trade. Euro Yen, follow your alignments. Euro New Zealand, no trade right now unless you sold it at 1.80. We talked about that last week to move stop losses and trap. We probably have room down to range lows at 75. Euro dollar. Dollar index is what you have to watch. We could see the dollar get stronger and the euro dollar comes down to 108.60 to 10800. We took a short on it last week. We'll see if that plays out. Pound Aussie, looking to sell. So we had a broadening pattern. We were selling this nice and high. It got a little nasty last week to retest it, near the highs at 93.50 or so, but I'm still short on Pound Aussie. Pound CAD, a lot of traders shorter this at the 18127, worked out great. Pound Swiss, I'm still holding long. We got strong support here at 110. Pound Yen, stay with your alignments. Looked like we had a fake out. We got 150 to 200 pips below my 180 mark. Wow, that's so volatile. It's crazy. 180 was the level I was watching, and we came all the way down to 176.40. So it's 350 pips of movement below my sell level, but it stayed there for a day, and then the next day gave it all back. So I didn't take a trade on the pound yen. We didn't have a stop sell or anything. I was just watching that level. And even at this point, if the pound yen goes here, does it still make another false high and give us a topping pattern on the right hand side of the trend line? Maybe, right? So I mean, we can still watch for higher time frame patterns and see if we get this to follow through. Pound New Zealand selling this high. I know we had a couple students that have been trading the range, doing really well. Pound dollar, we took a sell on this last week and made some good profit on it. We sold it nice and high, took up 150 pips on it. New Zealand CAD, I'm still long overall. New Zealand Swiss, I'm still long overall. And New Zealand dollar, that's chop suey right now. Dollar CAD, we cannot get a close above 32.50. So this daily candle close is 32.48, just a little tester. You can see the fake out. So I didn't get suckered into it. I'm waiting. If we get a close above 32.50, I like this trade back up. Watching dollar index, watching oil, right? I mean, we have to watch commodity prices. If oil gets bid and stays bid, the dollar CAD is probably going to push a little bit lower. 3,000 is a big handle for the dollar CAD. Dollar Swiss moving along better. We'll see if this one ends up taking out some highs in the next couple of months, but I'm looking for a bullish pattern. This is another one. If we take out this level, work our way up, pull back, I'm looking for a 5-way move to the upside. Okay, not there yet, but I'll wait, and I'm positioned here near term for some movement back to 88, 8900 for some short-term profits. And then dollar yen, stay with your alignments. Okay, dollar yen pushing higher. This also should bring my dollar sing back into play, not as aggressively. Okay, dollar yen is pushing higher again. We could be heading back up towards, 145 seems to be this kind of hidden interference level where the BOJ is willing to get more vocal. But last year we had highs at 152. So again, if we have, maybe price is 1, 2, 3, a little pullback against this swing, and we still have a sell-off on the Japanese yen, I'm not sure. Otherwise, if we have this structure and this pushes up to fresh highs, but it's divergent, we might put in a topping pattern. We might put in a double top here at 152. So I'm still watching, I'm still navigating. I just don't see a good setup on it right now from the technical side. Alrighty, really quickly, oil, gold, silver, and Bitcoin. Oil still maintaining bid, just a nice little slide from this, really heavy support at 65 and 67, just steadily moving higher above the 200 EMA on the daily. Commodities pushing higher. Okay, so I think oil has room to maybe in a sneaky fashion just kind of work its way up to, $90 to $94. I think right now oil is a buy and dip. I mean, I talked about this last week. 75 is a good level. We buy at 75, and this just keeps going higher. If we get a pullback, we might not get much of a pullback. This might just be this big release of, the oil bears were kind of pricing in recession, and it's looking less and less like we're having one, or at least if we do have one, it's going to be a softer one. And so I just think that the relief rally is upon us, and we're just seeing this lift off. So, I mean, we've had some pretty good energy plays with this. I mean, Rig, for example, Rig, for example, has already, I think, doubled since last year. We're trading at 876. We have some ownership in Rig. So we have some shares. It's doing really well. We have a bunch of credit spreads. We had a long call we took profit on. So again, riding out some profits on energy, gold, and silver. Let's have a look here. 1966 on gold. I think it's limited to the upside unless the dollar gets super, super weak. I think this, 1980 level is pretty firm resistance in the short term. I think silver is a better setup overall. I like silver a lot more from the long side, back up towards 29 and 30. And then Bitcoin, kind of dead the last 5 or 6 trading days. We had a push to the downside towards a monthly pivot. I thought that was enough to possibly break, and it still looks like that structure is legit. So this level in here, oops, that's not drawn very well. These lows. So intraday lows that were broken, tapping that monthly pivot. If this is going to take away that bull flag structure, we might have a break, all this indecision, and then another push lower. If dollar gets stronger, I can see Bitcoin selling off. We come back into 27, we come back to the lows at 25. We still have some pockets down here, all the way back to 21,020. But there's still some demand. I think Coinbase survived pretty well. BlackRock's a big backer right now. We've got some ETFs that are looking to come to market, pending SEC approval. So there's still the speculation trade. If I'm a bull on Bitcoin, the bulls obviously have to break 32,000. Otherwise, it's pretty quiet right now, and there's way more movement and volatility in equities than we have in crypto right now. Okay. All right, so that'll do it. That puts me right around 26 minutes for the video. I'll be posting this in my Flex Telegram channel as well as Equities on Demand, on Discord as well as YouTube. So hopefully this helps get everyone prepped for the week. I'm still with family for the next couple of days. Trading for me in the room should resume on Thursday, Friday, but I'll still be active in Telegram. I'll be looking for some trades for the new course Delta Trader. Same thing. I'll be watching my levels to see if I can get some afternoon trades. I'm watching everything right now. Last week was a pretty noisy week, and with the Fed out of the way and it's all earnings, we're going to see who's kind of justifying the market's move. So I think 460 remains a pretty good resistance level in the SPY. 450, just expect some tighter trading as we go into August. Things probably slow down. I would expect them to slow down, and maybe some of the good stuff has already been priced in. So watch for some range trading. Be careful and pick your battles wisely. We'll see how the robots do this week, and I'll see you back here on Friday. We should be live on Friday for the Pulver Report on youtube.com/Chris Pulver, and then trading rooms resume on Thursday because I'll be doing an airport run on Wednesday. Okay. If you have any questions, let me know. Chat in the Discord, and I'll see you in the markets. All right, take care. Bye.